Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies and their PLTR stock, and SoFi Technologies regarding their SOFI stock. In this video, we will be analyzing a plethora of articles, to where the first one is titled, PLTR Stock Alert. Palantir announces a new deal with Spectre Ops. So this is fantastic news for Palantir stock investors. After that, we'll move on to another article titled, Where Will Palantir Technologies be in the next 3 years? So clearly we're going to be going over their overall price predictions and if this company is still a good investment. Lastly, for Palantir Technologies, we'll be talking about why some analysts and various stock professionals have downgraded Palantir Technologies from a hold rating to a sell rating, and how I personally have sold off some Palantir Technologies. But let me be clear, I did not sell all of my Palantir Technologies. I just think that the valuation is too high right now, so I wanted to take some profits before earnings. However, this is not something that you should necessarily do because we have different risk tolerance, different investing strategies, and many other different variables. So I am essentially just playing it hyper conservative and very safe, and I'll give more details on why I sold around 1% of my overall Palantir holdings once we dive into this story. Lastly, we will round out the video talking about SoFi Technologies and their SoFi stock price regarding how they are still the bank of the future, and we will be going over their upcoming news catalysts and why this author believes this company should be trading at around close to 20 per share, implying their overall fair value from a discounted cash flow valuation. So with that being said, don't forget to go and annihilate that like button for more videos on Palantir Technologies as well as SoFi Technologies. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents because that's what keeps me here on YouTube. And without further ado, I say let's dive right into today's stories. Palantir Technologies, as you already know, is a big data and analytics company which serves both commercial enterprises as well as government clients. Palantir's stock currently trades for around $17.70, while on the lower end, analysts believe it could fall to around $5, while other analysts believe this company should be worth around $18, which is exactly what it's currently trading at. So let's dive into these overall price predictions to see what's up with Palantir Technologies recently. Well, right now, they just had a phenomenal catalyst because Palantir Technologies, ticker symbol PLTR, recently gained around 1.5% after announcing their deal with the privately held company named Spectre Ops. Palantir will provide this company with their overall solutions so this company can give their solutions to other government customers. Essentially, Spectre Ops offerings would include enterprise-grade defense solutions. And since Palantir's overall technology fits into that overall criteria, Spectre Ops is going to use Palantir Technologies and push their overall technology to various government customers. So this is phenomenal news for both Spectre Ops as well as Palantir Technologies. But since we cannot invest into Spectre Ops due to it being privately held, Palantir Technologies is our best bet, and that's why the overall share price has increased right now at around 1.5%. Now, some additional information about Spectre Ops and why this is a phenomenal opportunity for Palantir Technologies is because not only will Spectre Ops give Palantir Technologies a larger market, but it's also going to be able to push Palantir's technology to a plethora of other government agencies that Palantir didn't have access to before. But despite this good news, we have seen various analysts downgrade or stock reporters downgrade Palantir's overall ratings. For instance, as you probably know, Raymond James cut their rating on PLTR stock to outperform from strong buy, and the main reason they did this is because they believe their valuation is too high, meaning that the share price is trading at too high of an overall multiple compared to their accounting ratios and how their market valuation is really inflated compared to the company's overall earnings and revenues that they are bringing in, which we will analyze further in another article, and that's why I sold off and took some profits on Palantir Technologies, but I still hold them in my overall portfolio. I just decided to practice proper risk management, shave off some profits before earnings, and if it drops after earnings, then I'll be able to reinvest, and if it skyrockets after earnings, then the position that I still have will start to build even more value. But despite this downgrade in their overall rating, Raymond James still has an $18 price target on this company, unlike other analysts who have actually downgraded Palantir Technologies recently because their valuation is just trading at too high of a premium to justify an investment opportunity according to them. But Even with that being said, let's discuss where Palantir Technologies and their overall PLTR stock price will be over the next 3 years. Over the next 3 years, Palantir is set to expand their overall commercial business to reduce some of their dependency on their government contracts. And I've literally said this for years now, saying that their commercial business will be their dominant revenue segment. As of right now, according to 2022 metrics, their commercial segment brought them in around 44% of their overall revenue, while their government business brings them in around 56%. But I do think this eventually will change to where the higher percentage revenue yield will come from their commercial business, and I think this is actually for the better. Now, there is some problems with Palantir Technologies besides valuation, which we will get into just a moment, but let's just talk about some competition. First, I want to make it very obvious that there is no direct competition for Palantir Technologies. However, there are some direct competitors evolving in the market. For instance, Amazon and Microsoft are rolling out data mining and data analytics tools for their market-leading cloud infrastructure platforms. There's also a standalone competitor named Alteryx, ticker symbol AYX, which could further fragment Palantir's overall market. But honestly, I am not afraid of Palantir's competition because in my opinion, Palantir has better technology than all of these indirect competitors. My main problem is their overall growth rate compared to their premium valuation. As an example, analysts currently expect Palantir's revenue to rise at a compounding annual growth rate of around 19%, lifting their overall revenues from $1.9 billion in 2022 up to $3.2 billion in 2025, while their net profit of $115 million, which they're supposed to bring in for 2023, could see a significant tripling to around $403 million by 2025, which is good news. However, here's the rub. Palantir, although they are going to continuously grow past 2025 and onwards, right now the company trades at around 16 times this year's sales. So essentially, it's taking their revenue compared to their overall market capitalization, and that number is 16. Ideally, we would want this number below 10. Now, clearly, some companies can have a higher PS ratio or price to sales multiple compared to their overall growth rate, so they can offset some of their premium, but by comparison, Alteryx, which is an indirect competitor, is expected to grow their revenue at a 15% CAGR, just 4% less than Palantir's from 2022 to 2025, yet they only trade at 3 times this year's sales. So when we compare 16 times to 3 times compared to their overall growth rate of 15% compared to 19%, this is not justified. A 19% CAGR for a 16 times PS ratio compared to a 15% CAGR with only a 3 times PS ratio, Alteryx is actually a better buying opportunity according to this metric. Now, I do want to also incorporate their overall GAAP profits, which is a big deal. However, even if analysts are right and they bring in GAAP profitability of 15 cents per share in 2025, that means they would trade for more than 100 times that estimate, meaning that it is extremely overpriced in that regard. Therefore, the author concludes that it's unlikely that Palantir will revisit all-time highs over the next 3 years. Now, this financial reporter is aware of these premiums, and that's why he downgraded Palantir stock from a hold rating down to a sell rating due to their overall premiums that you were buying the company at. He says that the company is too expensive right now, and the growth rate does not offset that premium. He says that there is still long-term potential in Palantir Technologies, and I completely agree, which is why I've not sold my entire position. I am a long-term holder, and I intend to buy Palantir Technologies back eventually at a cheaper valuation. However, I trimmed my personal position by taking some profits before earnings because it seems that this company is just trading at too high of a premium right now. The company's overall valuation is just too expensive for me to weigh the risk to reward here. Therefore, this author has a sell rating on Palantir. Now, let me disagree with him. I do not have a sell rating on Palantir Technologies. I think their long-term overall prospects are completely intact, so I would still rate this company as a holding opportunity. There's no way I would sell out of my entire position. That is far too presumptuous, and I actually think that their share price could even go higher, but I don't really want to time the market in that sense. I'd rather just take profits while I'm up. So despite top-of-the-line growth of under 20% for the foreseeable future, this is not enough growth to offset their overall valuation, especially since this overall CAGR regarding regarding their revenue is anticipated to decelerate over the next few years. So I took some profits off the table to practice proper risk management, and I'm going to wait for this company to drop lower in price. And even if I'm wrong and it doesn't fall in their overall share price, the existing position that I still have will start to appreciate in value. So overall, I just wanted to let you know what I'm doing. I'm not saying that you should do this. I'm just saying, hey, I just wanted to keep you updated so I can be honest with you about what I'm doing with my Palantir position. But overall, I still think that the future looks bright for Palantir Technologies, but I do think I can get this company even cheaper. But I would love to hear your thoughts down below about that. Lastly, let's round out the video talking about SoFi Technologies, which is essentially a fintech company or a financial technology company that operates as a digital bank. SoFi currently trades at around $9.55, while bearish analysts believe it's worth around $3, and more bullish analysts believe the company could surge up to $14. Now, this particular stock reporter believes the company's fair value is close to around $20. So let's dive in to analyze exactly why he thinks that. SoFi is a revolutionary company, and I completely agree with him on that. This company should achieve phenomenal growth over the long term, especially given their three main business segments, making SoFi Technologies a behemoth with multiple revenue sources. Now, there's been a huge debate whether or not SoFi Technologies is overvalued or undervalued, but let's see what this stock reporter has to say. First, he talks about their ability to acquire new customers, and this is a phenomenal point. Over the last few quarters, we have seen concrete evidence from how this company has increased their overall revenues and acquired new members. For instance, in the third quarter of 2022, SoFi spent around $115 million on sales and marketing, which garnered them around 377,000 new members. So to acquire each customer, they spent around $305. Then in quarter 4, SoFi invested around $130 million on sales and marketing, which gave them around 523,000 new members at a price of $248 per member. Likewise, in quarter 1 of 2023, the company spent $175 million on sales and marketing to acquire 433,000 new members, equating to $404 per customer. Now, the great thing about this is, although SoFi Technologies is spending upfront costs to acquire these customers, $404 per customer is nothing, because SoFi is going to make thousands of dollars from these customers over the long term. So they are more than paying back over the long term for these customer acquisition expenses. Normally, SoFi members tend to start off by opening a checking account or a brokerage account or a CD, and then SoFi slowly moves to ushering in other products that may interest that overall consumer. They would encourage them to take out loans, open up a credit card account, and other things like that to cross-sell them and upsell them on other products and services, which will increase SoFi's overall revenue that they are obtaining from that customer, but simultaneously this is also helping that overall consumer. So I really like SoFi's ability to attract new members, and this is reflected very positively in their overall revenue growth as well as their overall bottom line, to where they are anticipated to become profitable at the end of this year. Right now their revenue growth is around 30%, which is absolutely amazing. And over the next 5 years, the company is set to grow at a CAGR regarding their revenue at around 25%, which again is anticipated, but since it's over that 20% mark, this company is rapidly growing. Likewise, after this year, the company is going to be profitable. So the author assumes that the company is going to be profitable and that they're going to grow at around a 25% CAGR, to where he concludes the company is worth at least around $20 right now, which is twice its current price. So let me agree to disagree with him. I do think SoFi Technologies has a lot of room to grow, but I don't think the company is worth $20 right now. Honestly, it would be much more conservative to say it's worth between $12 to $14, but even that is rather high. Until SoFi Technologies has their earnings report come out, then we can make more educated guesstimates on where this company is headed. So for Palantir Technologies, their earnings is going to come out around August 7th, and for SoFi Technologies, their earnings report is going to come out at around July 31st. So please be aware of both of these overall developments. I would love to hear your thoughts down below. Don't forget to go ahead and smash that like button right now, become a member of this channel to support me personally, subscribe if you are new, comment your thoughts down below, like the video if you haven't already, and I will see you in the next YT video.